Good afternoon, everyone. Welcome to NGLCC Webinar Wednesdays. It is great to be here with so many of you for such an important topic today. My name is Sabrina Kent. I am a Senior Vice President here at the National LGBT Chamber of Commerce, and my pronouns are she, her, and hers. We have an amazing program here for you today. But before we jump in, I want to say a big thank you to our partners at TD Bank for helping to put this program together, as well as the incredible NGLCC affiliate chambers who have joined us in collaborating for today's program: the LGBT Chamber of Commerce of Illinois, Out Georgia Business Alliance, Detroit Regional Chamber of Commerce, Civitas, LBGLCC, Three Rivers Business Alliance, the Pride Chamber of Orlando, Charlotte LGBT Chamber of Commerce, Desert Business Association, PABA, the St. Louis LGBTQ Chamber of Commerce, the Greater Phoenix Equality Chamber, Utah LGBTQ Chamber, GGBA of San Francisco, Keystone Business Alliance, GLCC and V, the Mid-America LGBT Chamber, Sacramento Rainbow Chamber, New Jersey LGBT Chamber, Rainbow Chamber of Silicon Valley, the Nashville LGBT Chamber, the Independence Business Alliance of Philadelphia, GSBA in Seattle, the Wisconsin LGBT Chamber of Commerce, our friends at the Hawaii Rainbow Chamber, the North Texas LGBT Chamber, the Greater Fort Lauderdale LGBT Chamber, and the San Diego Equality Business Association. We are so glad to see an incredible showing of affiliates partnering for today's program. I know many of you are keen to learn about the next round of PPP funding for your LGBT business, and we have an incredible group of leaders here to help navigate you through that process for today's program. Please be sure to use the Q&A feature on Zoom throughout. We're designating the last portion of today's program to ensuring that we get to all of your amazing questions. And to get things started, and to introduce our fabulous speakers for today, my good friend Steve Garibel, Vice President for LGBTQ2+ Business Development for TD Bank. Welcome, Steve.
Hi, thank you, Sabrina. And welcome, everyone. Thank you for taking the time to join us on Webinar Wednesdays. My name is Steve Garibel. I'm the head of our LGBT business development efforts for TD Bank in the US. My pronouns are he, him, and his. And I want to thank all of the panelists today for really coming on board and helping us. Today, we're going to hear from the SBA, from the Lendistry, Grassi and Company, Paycor, and from our SBDC centers. Being an entrepreneur, I think you learn how quickly it is and how lonely it is up on top. A lot of times as an entrepreneur, we go about this alone. And it's really important to make sure that you're building the right advisory board with you to help you through the process. I spent many years as a banker and a lender. And one of the hardest things is that we can't give all the advice in the world that we want to. So we as bankers have these advisory boards, just like all the partners on the call today are my advisory board. And they really help to fill in some of the gaps of knowledge that as an entrepreneur you might have. We really want you to be the best that you can be at your trade, and fill yourself around with some great advisors to help get through those things, like a CPA, a human resource expert, an attorney, a banker, people that can really help you identify all the different areas, especially when it comes to navigating something like the CARES Act. Before we got on the phone, I said, I feel like I need a master's degree in the CARES Act to really navigate everything that's going through and the changes that happen. So make sure you really build your advisory board and make them a group that can help you access the most relief and recovery programs that are out there. When building an advisory board, I look at really, have a purpose with what you want to accomplish with them. Recruit doubters. We don't want people that are going to tell you that's a great idea. We want people that are going to challenge our ideas, to make our business grow. And leverage your network. Look at this network we have here with hundreds of people joining our webinar, amazing corporate partners and amazing business owners inside that you guys can really work together on and build a great team. So I'm going to set us off and get us started. First on today, we have Robert Pachota, who is the Long Island branch office manager for the U.S. Small Business Administration. And I know him and his team have been extremely busy. After that, we are going to hear from Clarence Campbell, who is the Executive Vice President of Sales for Lendistry, who is a great partner to TD Bank, and I think you'll all find some value in listening to his presentation today. After that, we're going to hear from Lou Pizziello, who is a partner at Grassi Advisors and Accountants, another advisor to TD Bank, and has been a really great partner for all of our clients. After Lou, we are going to hear from Brian Orbach, who is a major market sales executive at Paycor. Paycor is TD Bank's preferred payroll provider, and through this pandemic, Brian has been an absolute outstanding resource to our clients. And then last but not least, we have Evelyn Carrasco, who is a business advisor at the Small Business Development Centers of America. She sits in the LaGuardia Community College Small Business Development Center and is really going to be a great resource for you on how to navigate and get some technical assistance at accessing these programs. So I will turn it over to Robert, who's going to take us through some of the CARES Act programs. Robert?
This is the Zoom world we live in. I think we lost Robert. Steve, might be a little connection issue.
Yeah, I noticed that. So while we're waiting for Robert, oh, here he comes as we speak. So Robert, we are actually in the process of turning the presentation over to you. So if you'd like to take it away and walk us through some of the pieces of the CARES Act.
Well, thank you so much. Rob Pachota here with his Small Business Administration. Just a couple of pros I'd like to share with everybody, and because we have a panel of experts that will really take you through the nitty-gritty. But first, I really want to say kudos to everybody here joining us this afternoon. You could have been anywhere, but the fact you chose this time worth investing in your business and your livelihood is phenomenal, because the information you'll hear today, I think, will go a great ways toward helping you get through the pandemic and out the other side much more viable. We have hit a major milestone with the PPP program. We just went over $103 billion that was lent to no more than 1.4 million businesses. Sounds like big numbers, but the point is a lot of money has been going out successfully to people who need it most. 82% of all loans are going to people that were requesting less than $100,000. So it's designed. It's been designed well. It's being executed better than the last go round, I think. And with all the help you'll hear about today, hopefully it should work well for you as well. Another big thing we're very proud of is 20% of all this money went to rural communities, which is a very positive situation, as well as the entire program really was designed to maximize your CDFIs, smaller lenders, which is typically where most of the small businesses and micro businesses get access to capital when needed. So I'll leave it at that. I don't want to go into great detail about the PPP and the EIDL, other than to say, you blanked on me. So there are other programs by which you can get access to capital. I do want to stress, though, if you have not applied yet for the EIDL, Economic Injury Disaster Loan, you can do so on your own through SBA.gov. If you access SBA.gov, it'll take you right to lending programs. And you can do that on your own. It takes maybe 20 minutes to fill the application out. I don't know what you've heard about it, but I highly recommend that you at least look into it and apply. If you get approved, you do not have to accept the money. If you get approved and you take the money, you can prepay it at no extra cost. And it is a loan, though. There's no forgiveness with that. It is a 30-year term loan of 3.75% for typical businesses. For nonprofits, it's 2.75. So it's a if you do the math, the debt service is pretty affordable over long term. That's the EIDL. PPP, my colleagues will get more involved with it. But I do want to point out that the typical hallmark lending programs by the SBA are still available. If you are a viable business and you're surviving, you're doing okay, even if you have an EIDL or a PPP or both, or maybe you didn't get them, but you still need capital, there still are the flagship loan programs called the 7A loan. Everything's got an acronym. I can't tell you what 7A stands for, but the 7A program is a working capital loan that is really the flagship for anybody who's looking to get working capital up to $5 million if you're a manufacturer, up to $5.5 million for capital equipment or much needed working capital. I'm not saying it's easy. I'm not saying it's free money. It depends. The interest rates will depend on the lender and the circumstance, but it is a very affordable way you get your hands on some much needed capital. But I'll get to my last point in a moment. But the second major program we have is the 504 loan. You know, these are trying times. Businesses are having a tough time, as you know. And if you ever thought about owning your own building, because of the pandemic, some people are losing their buildings. And again, this is not about capitalizing on other people's misery, but the marketplace being what it is, there might be a time now where you could actually afford to access and purchase your own building. The 504 program by the SBA allows you to put as little as 10% down if you qualify. And as long as you occupy at least 51% of that space, you can sublet the rest out to other businesses. So I won't go into great detail here because, again, you do have to qualify for all these programs. But I'm going to share with you one screen as hopefully this will work. So this is just a simple just going to show you one slide here. On the panel today, you have a number of folks that really can be tremendous, basically allies of yours. You know, Steve mentioned when we first started, this is not working out. Oh, there it is. Steve mentioned earlier, you don't have to go it alone. There's a great saying that I love quoting on these events, and you've probably heard it 1,000 times, but if you want to go fast, go by yourself. If you want to go far, go together. The people on this panel represent a number of resources you have access to, whether it be a professional that you want to bring onto your team to help you running numbers, et cetera, or maybe it's a free service by one of the SBA resource partners. A number of the folks listed here, and I'll send this out to the chamber. They can get it out to you. These are all hyperlinked. But you have things like Small Business Development Center. We have somebody fantastic coming up momentarily to talk about some of the ways they can help you. You know, getting money and getting smart on a number of things is really advantageous, but sometimes it's the little things like helping you run your numbers, doing your projections. SBDCs are phenomenal at doing things like that, as well as many other resources, getting access to information. I won't go into any great commercials for them right now, but just be it known that these folks can be a major help. How about having on your team somebody free of charge that's walked in your shoes? They've been an executive. They've owned the same kind of business you owned. That would be SCORE. You know, SCORE operates out of New York City. We have a local chapter here on Long Island. The links are listed there. And they are literally free advisors or mentors, as they like to call themselves, that can help you sort of figure out what's next. What can we do in times of challenges like now, or even in good times? You also have the women's business centers. I listed 2 websites here. There's one in Brooklyn, one in Queens. They're outstanding. Again, you don't have to be a woman to access these folks, but sometimes there's an advantage where people feel more comfortable by accessing these folks. They have a lot of the capabilities of any SBA resource partners. So lastly on this list is our resource guide. Rather than listing you all of the websites and all of the phone numbers, if you do click on, when you receive this hyperlink, you can click on our resource guide, and it lists everything by you that you can sort of access in terms of people, opportunities, how to become a contractor, et cetera. So I'm going to stop here. because there's a lot of information to pass along. I'm going to stick around for questions, but for right now, I will sort of nip this in the bud, hopefully get out, and I'm going to turn it back over to Steve. Thank you.
Thank you so much, Robert. And as Rob said, there's so many other programs besides just, we all talk about the PPP. The PPP, goes and helps with one area of need right now, but there's other programs, the 7A, the 504, really take a look at the different programs that are out there, especially with the 7A program, with certain qualifications, paying principal and interest for a certain period of time. So definitely take advantage of those. And I am going to now turn it over to Clarence Campbell with Lendistry, who's going to tell us a little bit about the organization and about how PPP round 2 works. Clarence?
Great, thank you, Steve, and I appreciate that. Let me just cue my screen up here, so we will be ready to go. Okay, so again, Steve, thank you so much, and thank you to NGLCC and TD Bank for having us here today. We are excited to be a partner of these two great organizations. Again, I am Clarence Campbell. I am the representative here for Lendistry. And what we're going to do today is we're going to talk just a little bit about Lendistry. So you'll learn a little bit more about Lendistry and who we are and what we do. And then we'll give a little bit of an overview of the Paycheck Protection Program, and then some tips for how to apply and the support there, and then we'll be available to answer any questions as well. So as we move forward, let me just share, Lendistry is a minority-owned, technology-enabled community development finance institution. And Lendistry was created really to support small business. As a community development financial institution, CDFI, we are mission-bound to support small businesses, particularly in the underserved community. And we do this primarily in two ways. We support small businesses with education that we provide with our online education platform and our sister organization called the Center by Lendistry, where we provide technical assistance to small businesses. And then we also support small businesses through access to capital. And that's in the form of traditional commercial lending services and loans, through our lending platform, as well as we're a direct lender of the SBA. So today we're going to talk about the Paycheck Protection Program, which is one program that we support. And we're also an administrator of grant programs. So it's all about supporting small businesses with access to capital. And over the last year, we have supported the small business community by providing over $500 million in capital and supporting over 78,000 jobs. And as you can see, in addition to being certified by the Department of Treasury as a CDFI, we're also certified by the Department of Treasury as a community development entity, as well as a member of the Federal Home Loan Bank of San Francisco. So let's talk a little bit about the Paycheck Protection Program. And this is technically the third round of the Paycheck Protection Program. And in many cases, many things have stayed the same. The Paycheck Protection Program was initially designed, and it still operates this way, to keep employees on payroll. So the idea was designed to keep employees and allow businesses to keep their employees on payroll. But it was also designed to be a forgivable loan. So while it is a loan, if it's not forgiven, it is a loan that's amortized at a 1% rate over a 5-year period. But the design from SBA was for businesses to gain this access to capital and allow the funding to be forgiven when you meet certain qualifications. And the basic qualification really is around utilizing loan funds for at least 60% of those funds going towards payroll costs, allowing up to 40% to be used for other acceptable expenses. So again, it's designed to be a forgivable loan when it's used as intended. But it's also important to note that in this round, there are two types of borrowers for the Paycheck Protection Program. One, we have what's called a first draw borrower. And the first draw borrower are individuals and organizations who have never received a Paycheck Protection Program loan. And so these are first draw customers, again, first time getting a Paycheck Protection loan. And then the second type of borrower is organizations and individuals who received funding in the first round and they're seeking funding in the second round. And it's important to differentiate that because there are some nuances this round that are different. So we'll start with the first draw, but it's important to note that for all Paycheck Protection Program loans, there is no personal guarantee required. There's no collateral required for this loan, and credit score is not a driver of the decision for approval. The decision for approval is going to be based on your payroll calculation that you can provide. So again, as we look here in terms of eligibility for a first draw, again, it's for small businesses, corporations, sole proprietors, LLCs, partnerships. As you can see here, it's also really important to note that sole proprietors with as well as sole proprietors without employees are eligible to apply, and independent contractors are eligible to apply for the Paycheck Protection Program. And that's for first draw as well as second draw. One of the things that we always like to point out, because this has been a topic of confusion for some borrowers that are sole proprietors, is that the way that the Paycheck Protection Program loan is calculated. So we will go over that in a moment, just so that you understand that. But it's important to note that sole proprietors with as well as sole proprietors without are eligible to apply, as well as independent contractors. Nonprofit organizations are eligible to apply as well. 501c3, 501c19, 501c6s are eligible to apply as well as some news organizations also. So it's important to understand that, as well as the 501c12. So you'll have a listing of these organizations. Just wanted to lift that up. But one other note that's really important to make about the Paycheck Protection Program loan is to be eligible, you must have been operational on February 15th, 2020. And that is a hard date by SBA. So you must have been operational on February 15th, 2020. So as we talk a little bit about how you calculate the amount that you can borrow for the Paycheck Protection Program, it's really important to go over this piece as well. And some of the things that hasn't changed is that for first draw customers, your multiplier is still 2.5. And that's 2.5 times your average monthly payroll. So to calculate your maximum loan amount, you would take your average monthly payroll over a 12-month period and multiply it by 2.5. And for first draw customers, you can actually borrow up to $10 million. So that's important to note. And for loans that were made through the EIDL program between January 31st, 2020 and April 3rd, 2020, those can be included in the loan amount as well. There's a special note here that you'll notice for seasonal employees, and we also define what seasonal employees are. Again, the calculation is the same, 2.5. However, the difference is that it's an average over a 12-week period, not a 12-month period. And it's important to note that a seasonal employer is a borrower that does not operate for more than 7 months in a calendar year, or for the preceding calendar year had gross receipts for any 6 months of that year that were not more than 33% of the gross receipts for the other 6 months of that year. So you'll have that information that gives you the definition of a seasonal employee. It's also important to note that for borrowers this round, whether it's a first draw or second draw, you can elect to use either 2019 or 2020 as your base period. And again, as we shared earlier with the sole proprietors, one thing that's important to note is that where there are not employees included, or even if there are employees included, sole proprietors would use the line 31 from their Schedule C and average that out over a 12-month period to get their payroll base. So really important to note that. And in terms of calculating your payroll costs, you'd exclude any payroll costs that are not included for the as eligible payroll costs. And then again, as you look at the second draw, the information is still the same in terms of who can apply. One thing that's just important to note is that you would have to have had a first draw paycheck protection loan to apply. And unlike with the first draws that are 500 or fewer employees, for the second draw, it's 300 or fewer employees. And also for the second draw, you must show that you have experienced at least a 25% or greater reduction in revenue for 2020 relative to 2019. And that's actually just 25% at least in one quarter. So you can use quarter 1, 2, 3, 4, or the annual for 2020 compared to 2019. Also important to note that all funds from the initial Paycheck Protection Program loan would have to have been utilized before you secure the second Paycheck Protection loan. Calculation is the same here. One thing I'll just lift up is that on the second draw Paycheck Protection Program, for businesses that have the NAICS code of 72, which are the accommodations and food industry, there is a 3.5% multiplier versus the 2.5%, and there's a cap of $2 million for the Paycheck Protection Program for second draw. Just one of the things to lift up here in terms of tips for applying, we will provide here a link to how to apply through Lendistry. We are there and available to take applications and support you through that. This link will take you to a page that all of the materials on this page can be converted to other languages by simply clicking on the translate button for the materials here. So even though the application is only in English, the materials can be translated to other languages. And this will also provide additional resources around required documents, eligibility, as well as a full paycheck protection guide that you can use that will also give you tips and screen prints on how to complete the application through Lendistry. So again, we'll be available to answer any questions at the end. But with that, I'm going to turn it back over to Steve.
Clarence, thank you so much for sharing all those tips on PPP first draw and PPP second draw in round 2. As you can see, there's a lot of moving pieces in it, and that's why it's really important to have one of these great partners to help along the way, or someone on your advisory team to really help you navigate and understand this. Things get released daily. So I see there's a lot of questions coming on, and a lot of those questions will be answered at the end with, there's interim orders that happen all the time. But now we're going to go over to Lou Pizziello. Lou is a partner at Grassi, and Lou's going to go through some of the accounting and tax pieces from the CARES Act. Lou?
Hello, everyone. Good afternoon. Pleasure to be here with you today. Sorry, I took a minute there. I've been trying to power through the Q&A while my other while the others were talking. This is confusing. There's an alphabet soup of stimulus that's available, and as an entrepreneur or a small business owner, this is not your main line. It's generally not the highest and best use of your time. You're used to running your business and doing what you do. So as the other presenters said, engage as many of your advisors as you can, whoever those are. I always make the joke, whether that's your mother-in-law, your brother-in-law, whoever it is, it can be isolating running a business. And, perspective is important, and these things may be in your blind side. So, attorney, accountant, in-laws, whoever that might be, rally your advisors and figure out what's available. The program requested that I speak about forgiveness of the loans and the taxability of the loans. So the taxability of the PPP loan has been controversial from day one. When it initially was written into the law, it explicitly stated that the forgiveness will not be considered taxable income. The IRS wrestled with that a little bit and came out later and said, while the forgiveness won't be taxable income, the expenses you use for PPP forgiveness won't be able to be included as a tax deduction. That essentially gets you to the same place. However, I'm happy to report as of December 27th, when the legislature passed the 2021 Consolidated Appropriations Act, and it was signed into law by the president. That's no longer a question. These are federally tax neutral. So the income from the loan forgiveness is not taxable income, and your expenses used against to qualify for forgiveness are not lost deductions. So you will use them for your forgiveness application, and you will also include them as a tax deduction. That does not mean, unfortunately, that every state will follow. I can tell you that in my region of the country, the Northeast, many are. They've kind of followed along, but it does vary from state to state. And then also there's lots of local governments as well that have different rules. So you should check with your accountant with respect to those as well. On the topic of forgiveness, the PPP loan is a 7A loan, but really what it is a grant disguised as a loan. The government chose the 7A program as a mechanism to get these funds out because it was a pre-existing mechanism, and I think the most efficient way to get it out. Some might gaffe at that because the program has been a little bit bumpy, and the rules have been very, very dynamic. But as Rob started off the conversation, a lot of money has gone out, and it's a much needed aid for a lot of businesses. So while it's had its challenges, it's been like, flying a plane while building the engine. If you step back from it for a second, the money got out to borrowers, and it's hard to say yet because the program hasn't completed, but that's what was needed, and you could say it was a success. With respect to forgiveness, the way the mechanism should work, at this point, some may have filed for forgiveness on the first round of PPP. Many have not. Most of the platforms after December 27th were put on pause at most lenders because they're revising the platforms for the changes that were made in those laws. The changes are good news. They expanded the types of expenses that can be considered for forgiveness. There were 4 new categories. I'll just run through them quick. One category was software costs with respect to your operation. So if you have cost of a POS system or an HR system or an accounting system or any licensing cost or service costs for software use that's critical to your business is now allowable and forgivable expense. The big one was personal protective equipment to protect your employees or your customers, masks, cleaning supplies, both from an operating and capital improvement standpoint. So if you've made changes to your fixtures, or you added plexiglass, or you changed the layout of your physical plant or store, those costs are now also included as allowable and forgivable, both retroactive to PPP1 and also PPP2 loans. Another category was damages sustained as a result of the political and social unrest throughout 2020. So if you were a retailer that was in one of those parts of the country and your store was damaged, costs that you incurred to repair your facility are both allowable and forgivable uses of the loan. And the final is pretty broad. It's, supplier costs. So, if you sell goods and you had a purchase order for goods pre-COVID, and those are critical to your business, those costs are also now allowable and forgivable. So the platforms for forgiveness are being updated for that. There's sort of lots of things that have been happening with respect to forgiveness. The process is somewhat dynamic as well, but the way that it had worked and will work once the platforms come back online, you will go on your lender's platform, much like you did for the loan application. You'll fill out the application for forgiveness. You will supply a good deal of documentation to support that around the payroll and other costs. You'll press submit. The bank or lender has 60 days to approve that for forgiveness, and then they will forward it to the SBA. The SBA then has 90 days to pay the bank off for the loan if they agree. And then at that point, you'll learn that the loan was forgiven. Now, if your loan size was less than 150,000, your process for forgiveness will be much more abbreviated than that. You'll fill out a form, which is about a page long, and sign some certifications, and you'll be done. It still goes through a review and approval process, but at that point, you'll be done. If it's over 150,000 but less than 2 million, it'll be somewhat similar to what I described. If you're over 2 million, there's one more step in the process, in that the SBA, once they receive the application for forgiveness from the bank, will request the bank for you to fill out a loan necessity questionnaire. And that's in order for them to evaluate some fact patterns and data points with respect to your ability to make the certification that you made that the economic uncertainty caused a need for the loan. Now, there's been a ton of controversy and anxiety around that. Some of the questions in the loan necessity questionnaire talk to business activity and liquidity. We believe that really what it is doing is providing a data, a bunch of data and somewhat of a heat map to allow the regulators, the SBA, to determine where they need to ask more questions or where they need to focus audit efforts. That's what it is right now. It is under a lot of scrutiny. There's quite a few lobbying organizations that have brought suit against the SBA for the form. It's a bit dynamic. It could change. Because of all this uncertainty around it, our counsel to our clients has been to be patient, press pause. There is a real strategic advantage to waiting. And when you go to the doctor and you hear wait and see, it's never a good answer. I always hated that answer, but in this case, wait and see causes you to be at an advantage. And there's a lot of reasons. We've been preaching wait and see for a while, especially, for the smaller borrowers. Early on, there was a lot of talk of auto forgiveness. We almost got there. For the borrowers under 150,000, it's a very, very simple process. That was new at the end of December. But if you filed before that, you might have exerted more effort than necessary. Some of the other changes that were talked about earlier, the EIDL emergency grant initially was supposed to be deducted from your PPP forgiveness. As of the end of December, that's changed, so that's no longer deducted. I will tell you, if you experience something different, while the law didn't require it to be retroactive, the rules in the application were put forth in a retroactive fashion. So even if you went, you should be able to go back and get that. And then Brian is going to talk about in a bit the employee retention credit. And that's another credit that utilizes payroll. And there's a good deal of interaction between what you use for PPP loan forgiveness and what you use for the employee retention credit. So to some extent, there's, a lot of cause for pause and patience. But with that said, I know, most business owners and entrepreneurs are anxious and want to, get this off their balance sheet and qualify for forgiveness as soon as possible. I think that's all I have. And with that, I'm going to turn it back to Steve, and I'll be in the Q&A, hitting them as quick as I can as we continue through the presentation.
Yeah, thank you, Lou. You are doing an amazing job in the Q&A. I want to, thank you for that. I'm, the information that you gave is so priceless to have, and especially with, we were on a webinar last week, and Lou gave the best advice to kind of take your time with forgiveness, because this is an ever changing process. So it's okay to not be forgiven right now. Just take your time, and it'll all be great. So I'm going to turn it over to Brian Orbach from Paycor, who's going to continue Lou's conversation about some other employee tax credit things to be on the lookout for.
One thing before Brian starts, I just forgot to add from a timing perspective, and it's critical. Sorry, Brian. The actual forgiveness application is not required to be due until the maturity date of the loan. So there is a lot of time, and these loans won't amortize. In other words, you won't be called to make payments on the loan until 10 months plus 24 weeks past your loan origination date. So about 16 months. So it is a long time for most borrowers of PPP1. That puts you into late spring, summer. So there's plenty of time. And by waiting, you get a chance to see what some of the other borrowers that went before you experienced. So it just gives you a better strategic position long term. Sorry about jumping in there, Brian. I'll turn it over.
No, thanks, Lou. And kind of to piggyback off that, a big piece of, and I'm going to talk about employee retention credits in a minute, but a big piece of it is there's a lot of changing guidelines that go along that you've probably heard throughout the course of the webinar so far. For instance, the employee retention credit, up until about a week ago, the IRS was saying you could, if you got a PPP loan, you couldn't use the employee retention credits. Now there's guidance from the AICPA that's saying otherwise, and I'll kind of bring Lou back and forth in this conversation in a minute. But the employee retention credit is actually very much like the PPP loan. It's not really a grant as much as, or it's a grant more than it is a credit. And it's basically so anyone that you've had on the books before March 12th of 2020 and had on the books as of 1/1/2021, it is a credit for keeping them employed. You can also, if you had a government mandated shutdown, if you were a restaurant and we were forced to shut down, or you have decreased revenue of about 50% over the previous year's quarter, for this quarter one of the previous year, for example, then you are eligible for the employee retention credit. And I'll kind of lean on Lou in a little bit about this, but one of the things that we want to talk about too is kind of moving forward out as we come out of COVID, with obviously the vaccinations are coming through, and we can see that there's probably going to be another round of stimulus in some way, shape, or form, and the government is going to get very involved in that, to pumping to make sure that we get more jobs created, because job creation obviously creates tax revenue for the government, and that's kind of really how we're going to pay a lot of this back. But as we go to hiring, and one of the things that Lou talked about was how technology is now a forgivable and allowable expense under the PPP loan. I would tell everyone right now to start looking at, if you haven't already upgraded your technologies to move into this post-COVID environment, I'd recommend doing it. A lot of the things that you do right now that you do manually can be done via an automated system that's going to alleviate a lot of time, effort, money. So it's going to create a little operational and cash flow efficiencies for you. One of those being work opportunity tax credits. As you now come to hire people back to the workforce, whether they be military veterans, people that live in impoverished areas, having type 2 diabetes is considered a disability under the government, that there is a tax credit. It's not as big as the one that you get for the military vets, but there are a lot of different tax credits out there between local, state, and federal governments that are willing to put a lot behind you to hire folks and get more of a tax base. So that is there. And there are a lot of human capital or payroll systems out there that will automate this process for you and take a lot of the guessing work out of it. At the same time, the big thing we like to talk about is not doing forensic accounting, but doing real-time accounting, whether it be in your payroll system, your accounting ledgers, whatnot, and dictating when it's happening, what you are doing, how many people you're paying, et cetera. Hardest part of it is, you asked me what I had for lunch yesterday. I'm not going to remember. So try asking me 6 months ago, how many hours did this person work, or did I work 6 months ago? I'm not going to know. So taking that and really doing the information gathering in real time is a benefit beyond anything else. But kind of getting back to the employer, the retention credits, is, and I'm going to piggyback off what every other presenter said, is talk to the CPA, your attorney, your banker, your payroll company, the people that you trust in your world to help you make business decisions. Lean on them and use the advice that they can give you. Lou, did I miss anything on the employee retention credit on the max amounts and stuff like that you want to kind of touch base on?
No, you're spot on. And, long story short, it's a rich credit. If you've had the partial closure or the revenue reduction, you should be looking at that as well as the PPP2. The one thing I'll mention is there's been a lot of anxiety around the certification in need. We've been talking with a lot of PPP1 borrowers who, look, in one, nobody knew what their business looked like in a pandemic. It had never happened before. Right. So uncertainty was certainly more uncertain, even though there's still a good degree of uncertainty. But with a year's track record of a pandemic, can you still make that certification today for a PPP2 loan? If for some reason, you don't think you can. And I was talking to a borrower yesterday who, they had a dip in their second quarter, but in the third, fourth, and first quarter of 2021, they've done tremendous. They're sitting on some cash and they're not comfortable making that certification again. So instead of applying for PPP round 2 and utilizing that payroll for that, they will qualify for the employee retention credit and they're going to pursue that. So there's like I said in the beginning, there's a lot out there. There's another grant program that is really narrow, the Shuttered Venue Act, which we haven't mentioned previously, but for the performing arts type entities or concert halls and arenas, if there are any on there, those entities have another thing to look to. And typically that grant is more rich than PPP or the employee retention credit. And there's a conflict of all three. So, I know we kind of like beating a dead horse, but before you go forth, sit with an advisor so you don't trip missing out on something and realizing it after the fact.
All right, so Steve, we'll turn it back over to you.
Thank you both for going over all that stuff. When you think about it, there's putting your forgiveness package together is going to be a puzzle. So don't go at it alone. I love the quote that Rob said earlier, but we definitely need our team to help us through this. And, one of the ways that you could do this, I saw a lot of great comments about the SBDC, and I'm a big proponent of partnering with the SBDC. So up next is Evelyn Carrasco. Evelyn is going to go through just some of the partnership opportunities that you do have with the SBDCs, and make sure you take advantage of all these great services. So Evelyn.
Sure. Good afternoon. I'm happy to be here, and I'm happy that I have heard all of the information that we also provide to our clients. So my name is Evelyn Carrasco. I'm a business advisor for the LaGuardia Small Business Development Center, and we provide support for clients actually who want to start a business. So we provide support on what type of legal structure should they use according to the industry and according to what type of business they want to do, retail, manufacturing, or is it just a hobby? So we advise on that. We also allow the clients to understand what legal requirements they need to comply with before they go into opening the doors for the business, so they are safe. They don't have to pay any things that is not required for them to have. So they don't have to pay the price, I would say. We also provide support on business plan writing, on loan packaging. So when the clients need to apply for a loan with, let's say, TD Bank, for example, so we are the middle person between the client and the lender. So we do the loan packaging. So it makes it easier for the lender and the client to understand what type of documents they need to have ready. When we go to the lender, they don't have to ask for much because we already advise the client and we have it ready. So we do that. We also provide support on marketing strategies, social media marketing, HR, project management, in case they want to start a project, they don't know how to do it according to the money, to the scope and everything that they need to have in mind in order to start that project. So we provide support on that. We also provide support on a small, not a small, it's a program that we have. It's called BidLink, which is a database that we allow our clients to register, and they have access to government and private projects. So it's very useful in the way that they don't need to be minority or woman certified yet, and they can actually take advantage of those projects out there. We also provide support for disaster, and this is something that we are doing very strong now, because we have a lot of clients coming to apply for the PPP, but they don't understand what is the PPP. So we are there to explain all the guidelines and the process to apply. So we start by identifying what are the needs of the clients, what is the industry, so we advise correctly, like you said. For the accommodation and food industry, they have a higher percentage that they can calculate the amount that they qualify for, and so on. So we provide support on that. We also provide support on how to do it, because we have some clients that unfortunately they don't speak the language, so it's a little bit hard for them to do it. So we sit with the clients and we guide them through the process of the PPP application. We also allow them to know the documents that they need to have ready, so they have no delays in the application. I have some clients that they, due to the age, they cannot do much on the computer. They are not tech savvy. So I had to take the opportunity to go and see these clients. Of course, taking the safety precautions of the COVID-19, and help these clients to apply for the PPP and the EIDL loan. So we go a little further than we have to, just to accommodate the client's need, because we want them to succeed and we want them to get the money. So we provide that support. At least some of us are able to go out and assist some of the clients. So when it comes to understanding the guidelines, we also take the time to explain everything about the PPP, because it can be a little bit confusing. What is permitted now that was not permitted in the first draw, and so on, and the percentage, for the industry and so on. So we give all that information to the clients. When it comes to the EIDL, we also ask the client to do it themselves. Some of them feel a little bit afraid to do it alone. So we can actually connect virtually, and we can see the client doing the application, so we can advise in the right way what to answer and how to do it. So that way they have more opportunity that the loan is processed without any major issues. When it comes to the EIDL, once again, we also provide the documentation. We send the client all of the documents that the SBA will be requesting later on, and we advise the client how to complete it. If they cannot do it alone, we sit with them and we help the client to complete the application. Of course, we don't input any information, they have to do it, but we are there just making sure that everything is right and everything is correct. So we provide that support. We also, as an added value to our clients, we also provide information on other grants available, like the shorted venue operators grant. We allow them to understand what it is, how to apply, well, where to go. Of other grant program, like the Queens Small Business Grants and others, from FedEx, Verizon, and other companies. We give this information to all the clients, so they have the ability to apply and actually get extra money, because we all know that they need it. They need it a lot. And thankfully, most of our SBDC clients, they have obtained money from the PPP, EIDL, and some grants too. So we are very happy to be able to help in this way. So this is what we do. We have other services like business plan writing. If somebody needs a business plan because they need to apply for a conventional loan, and they don't know how to do it, we sit with the client, we explain with a sample business plan, and then we guide them through the process of writing the business plan. Once they have started writing it, we also provide support on editing and requesting information for research. We have a research department, so the client doesn't have to do it alone. We are there to do it with them. And then projections. I know Robert at the beginning mentioned the financial projections. Yes, we work with that as well, because it's really needed for most of lending products, you know. So we provide that support as well. We explain how to do the financial projections and how to identify the cost and expenses and everything else that they will need. So we sit with the client one-on-one to allow them to understand everything completely before they go ahead and give an extra step in their business. So we are happy to do so. We have been helping a lot of people obtain PPP loans and IDLs, and we are happy for that. And that's what we do. I mean, we are here to help. Anybody that needs support can go online, find the closest SBDC. We have multiple centers throughout the city, so they can go to anybody. And the most important thing is that it is 0 cents. It's like we don't charge for anything. Some people ask me, but how much should I pay you when I do the PPP with you? It's $0. None of our services are of a charge. Everything is free, so they can access all of them with no money. Okay, so that's what we do. And like I said, I'm happy to explain everything to our clients, and I'll be happy to answer any questions that you have. And I'll take it back to Steve.
Evelyn, thank you so much. And I have to say that the SBDCs have been so helpful to a lot of our clients. And, you know, as I was a lender in my previous role, and, you know, when you have to put that business plan together and put your projections together, it could be a daunting task. So don't go at it alone. You know, I think that's the theme for today. You know, access these great professionals that are here to build your strategy team. And with that, I'm going to turn it over to Sabrina, who is going to take over for questions and answers.
Thank you so much, Steve. Thank you to all of our fabulous presenters. I'm learning so much, and I love seeing all of these questions rolling in. So a reminder to everyone, please use the Q&A feature on Zoom. We've got some time here for our presenters to drop a little more wisdom and knowledge on you for today's program. And with that, moderating today's Q&A is the amazing Special Assistant and Educational Initiatives Program Manager at NGLCC, Lauren Schweppe. Take it away, Lauren.
Thanks, Sabrina, and thanks so much to our speakers today. So we did have a couple questions posted in the chat. We had a couple about banking. Someone asked, do we need to use the same bank from our first PPP loan? And then somebody else asked about banking size and that they bank with a larger bank, and would they be better off with a smaller bank instead?
Thanks, Lauren. I can take that. And thank you for the question. Really, two really good questions. So for the first question, in terms of where to return for the second draw PPP, you are not bound to use, you're not required to use your initial lender. However, what I will say is the benefit of going back to your original lender, if they're participating, is that they have most of the documents that you will need. So SBA has really adjusted the requirement for the minimum documents for second draw loans, and your lender has gathered the bulk of what's needed in the first draw. For the second draw, you would typically just need to provide a new SBA application, Form 2483 SD, as well as the 25% reduction verification. And in some cases, you may have to provide additional payroll docs for the current year for 2020 if you're looking to borrow more. But that will be the benefit of going back to your original lender. If you go with a new lender, you're still able to get the second draw. It's just that the new lender will have to gather all of the documentation from you again. So again, you're not bound to your original lender, but there are some benefits of going back to your original lender. In terms of size of bank, it really doesn't matter. You know, part of what we've seen with many small businesses is that they don't have a relationship with a bank. So it really is beneficial to reach out to an organization like a Lendistry or other CDFIs that you can connect with. But the most important thing is that you get connected with a financial institution that can support your needs. Thanks, Lauren.
Great, thanks, Clarence. Another question that we had come through was, do you have to get the first round of your PPP loan forgiven before applying for a second round?
I'll take that one again. You actually do not. You know, as Lou shared earlier, you actually have time to file for the forgiveness, so you do not have to have the first round forgiven before applying for the second round. What you do have to do, though, is ensure that you've used all of round one funds before you accept funds for round two. But you do not have to file forgiveness first.
Yeah, and I'll add, you know, there have been some borrowers that have experienced some difficulty because they filed for forgiveness, and the new platform that's being used for PPP2 is still a little clunky, for lack of a better phrase. And that's caused some delays for borrowers who had already filed for forgiveness. Now, there also is a provision in the law that if you filed for forgiveness and your application is under review, your PPP2 loan will be your funds will be earmarked, but it won't be approved until that issue has been cleared. So, you know, it's another cause for pause on the forgiveness application, which is what we've been preaching for quite some time. So, you know, patience is key on the forgiveness. And as Clarence said, there's been a ton of confusion around this, but you have to spend the funds, but you don't have to apply for forgiveness. And you actually don't even have to achieve forgiveness. You just have to have used the funds.
If I can volunteer just to piggyback some great points, thank you both. But with the second draw phase, that's what we're calling this. So you've got your first PPP, fantastic, going for your second draw. And if you read the legislation, which it's rather daunting just to get through it, but it clearly states that this round is going to take a little bit more length of time, a little more deliberate. By the mere process, when the pandemic first hit, PPP, the very first program, you submitted your application to the bank looked it over, vetted you, submitted it, and quite often money was dispersed rather rapidly for those who got it. This time around, by design, it's going to be a little bit more scrutinized to make sure that everything is as it should be. And then going off your PPP1 to help sort of guide the train with that, are all the documents aligned with the second draw information that's being submitted? So some people are getting what they call hold codes, or there's another phrase they use, some kind of error. But the issue is sometimes the information that the borrowers put on their first application, maybe you used your social security number to secure the loan. The second draw, perhaps whether you use the same lender or maybe a different lender, you put down your EIN number. So things may get pushed back. Doesn't mean you'd be disapproved, but there might be an additional hurdle of sorts for you and your lender to sort of navigate and make sure that everything is aligned. So don't panic if it says that you may not be eligible or may this, may that. Just take your time, take a deep breath, work with your lender to make sure that you have provided everything being asked for. It's not uncommon this go round.
Great, thank you all. Another question we had come through. We are a woman-owned commercial construction firm that opened in March of 2019. Although our sales are not 25% less than our 2019 startup period, the pandemic kept 2020 sales 54% below what was needed to remain operational. Round 2 funds are much needed to continue operations. What can we do? I currently have an SBA 7A loan. So
a couple of things. The 7A loan might qualify for what the SBA has done is actually picked up some of that loan amortization, depending on the date of the loan. You may qualify for up to restaurant businesses are up to 8 periods. Non-restaurant businesses, I think, are 3 or 6 months of payment. So you may qualify for some payment support for the SBA. You should speak to your lender about that to see if you do. The EIDL loan may be a good option for additional working capital. That's available through the SBA's website, and the application process is, while it says it will take 2 hours on the website, I've been through it a couple of times, it takes considerably less if you have the data. And then finally, because you started in 19, I would recommend you kind of look at the PPP qualifications with an advisor, because when you don't have a full year of 2019 operations, the reductions operate a little bit different. If you're seasonal, they operate different. So it's worth a second look with somebody familiar with the programs.
Great, thank you. Another question that we had come through was what to do if you haven't yet paid yourself as the owner of the company.
I can take that. So there are a couple of things to look at there. The calculation for the Paycheck Protection Program is based on the average monthly payroll. So you would look at and use the documentation to show what you have paid out for payroll. And typically what's going to be used for that is a payroll statement along with your Form 940 and 941s. However, if you are a sole proprietor without employees, you actually would use the line 31 on your Schedule C and your 1040. That would show your net income. So you, even though you may not have taken a salary, you still can use the net income. So it really is driven based on whether or not you have employees, how you would calculate that, and then how you receive your net income.
Thanks, Clarence. Another question we had, if we were denied EIDL loan last time, can we put in for reconsideration now?
So I'll handle that. I know Evelyn's probably chomping at the bit to do this, but the answer is yes. You have 6 months, the time you are denied rather, to ask for reconsideration. And quite often when they give you a declination letter, there's a certain phraseology they will use. I highly recommend you get in contact with one of your resource partners, SBDCs, scores, you can call me. Stephen can put you in contact with me, but I highly recommend you do so. If by chance, it's already been 6 months, then we need to talk, but you certainly can ask reconsideration anytime. You can also, the scenario does happen where somebody was approved for $150,000 and they chose not to take that because they didn't think they needed, because they should have been okay. They got through, let's say 3 or 4 months of the anticipated pandemic, but all of a sudden here we are, and they could have used the full amount. You can again ask for reconsideration to receive your full amount of what was originally approved. I think someone touched on this. There is a new provision in the legislation where if you received an advance and let's just say you had the money sitting there in your account, all of a sudden one day part of that money was taken out by the SBA or someone else, they were taking out your advance because you got a PPP loan, or maybe your lender withheld the amount of the advance from your PPP forgiveness. If either of those had occurred, the SBA will contact you and basically give you that money back. They're not going to count your advance against your forgiveness, and they're going to forgive all the advances. So it's going to be a thorny process, but it will happen. Just want to put that out there.
And I wanted to add something as well, because we have some clients, we have multiple clients that come asking for reconsideration letters, and we do help with that as well. We have a nice way to put it, giving thanks before asking for the money, and they have been successful. I mean, we put a letter saying, thank you in advance for reconsidering my request, but I need such and such. So we also provide support on writing that letter as well, and adding all of the information that the SBA will need in order to go into the system and look up that loan number.
Great, thanks everyone. Someone in the Q&A asked, my line 31 is a loss due to depreciation. Can I add back?
I was struggling with answering that, to be honest. I went and looked at the calcs a couple times. I don't believe you can. I don't know if Clarence, you seem pretty familiar with that section of the guidance. Are you aware of anything that allows you to add depreciation back?
I am. Thanks, Lou. Yeah, and unfortunately, you can't add back. We actually, for the Schedule C, it's going to be based on a hard number on line 31. So if it is a negative number, unfortunately, there wouldn't be any income to average over a 12-month period. Now, one thing I will say, though, one thing I will add, just, and you may have considered this, but what's different this year, or an option this year, is you can use 2019 or 2020. So I would look at the Schedule C for both, before, to see where you are, because you could use 2020 as well.
Thanks. Another question that we had come in, what quarters can I use to compare with each other to qualify for decrease in revenue for our second draw PPP if we opened our business in February 1st of 2020? So we were not a business in 2019 and did receive a first round of PPP last year. They said everything I read in the original bill says we can use any of the above calculations to qualify, which I read as comparing any quarter in 2020 with any other quarter in 2020 to show this decrease in sales. Is that correct?
Yeah, and I put out in the Q&A, answered a similar question with a link to the SBA's guidance on that. My understanding is it's your sort of baseline quarter is that first quarter of 2020. And then you can compare any other quarter in 2020 to that first quarter. And if you have the reduction, you've qualified.
Great, thanks, Lou. Couple more questions here. Can you explain further the earlier comment regarding Bank of America suggesting that EIDL loans do not have to be repaid, referencing SBA procedural notice of January 8th, 2021, control number 500-2075?
Yeah, there's a ton of confusion around this. So the EIDL program is a loan. In its initial iteration, I guess spring of last year, where COVID just started to hit, there was an emergency grant that you could get even prior to your loan being approved. And it initially was up to 10,000, and then it was 1,000 per employee, and then the funds ran out and there weren't any. They did turn on that grant again, but it's now called a targeted grant and is a pretty narrow population of borrowers. When the PPP program was changed at the end of 2020, the grant portion of the EIDL loan no longer needs to be deducted from your PPP forgiveness. So in the past, if you had an EIDL advance and you took a PPP loan, let's say it was a $100,000 loan, when you filed for forgiveness, you would only qualify for $90,000 of PPP forgiveness. They sort of didn't let you double dip on the grant. The PPP was sort of the max portion of the grant. The rule changed at the end of December, and it changed retroactively. So your PPP loan will now be forgiven in full, even if you had that EIDL grant, and the EIDL grant is not required to be paid back, but it's only the grant portion. There's still, some folks got the grant and then got the loan. The loan's still required to be paid back. But there were folks who just got the grant and didn't qualify for the loan. And then it's, just the grant. You don't have to pay anything back.
Thanks, Lou. One person asked, can I use the same year for a PPP first draw and second draw?
Yeah, good question. And yes, you can. Again, for this round, you can elect to use 2019 or 2020.
Not only can you, I think it's advisable, unless for some reason your payroll cost went up, because if you use the same period as Clarence mentioned, you don't have to resubmit. In most cases, most lender platforms, if you use the same lender, don't require you to resubmit all the documentation to support the loan amount. So there's an advantage to using the 2019 amounts. My counsel to the borrowers is, unless the payroll went up, which in most cases it hasn't, stick with 2019. It's the easier of the two.
Thanks, Lou. And it looks like Evelyn is going to take this next one. Can you apply for a second EIDL if you received grant money in the first application?
Sure. Yes, and the answer is no. You cannot apply for a second EIDL because you will be declined. However, you can write a letter for an increase, and you can say things like, I have used the money, but or I need extra money. And you can actually send that letter to an email that we have, or, I can put it available now so we can, everybody can see it. But no, you don't have to apply again. You just ask for an increase of funds and they will consider you based on the information that you have provided before.
Great. Thanks, Evelyn. And thank you, everyone. It looks like those are all our questions for now. If anybody has any specific questions, participants, please remember to reach out to your local SBA office for any specific questions you may have. A reminder that we will be sending out all of the slides and links from today's webinar to all participants, and the recording for the webinar will be posted on our YouTube. So with that, I would like to turn it back to Steve for any closing thoughts.
Thank you so much for everyone's participation today. One, for being present and being on the webinar. I think these are great times while we're all not out in public together. I think that these are great times for us to learn and build our knowledge base. But I think if you take away one piece from today, it's really that we can't go at it alone. There's so much information. I can tell you that the amount of people deployed at the bank to work on PPPs and the amount of calls we have to update us on what's changing with the underwriting and things that we have happened is really crazy. So, we don't go at it alone from a financial institution's perspective. We have lots of partners, and same thing with all the partners on the phone. So, if you're going to do something for 2021, really take a look at your business and who your advisors are, who's going through this journey with you, and make sure you have people that are going to push you and really help give you the best advice, and access those free resources. They're out there, and I think they're very underutilized, and they could definitely be a great benefit for your business. It's a great time to look inside and see how you can change things. So thank you all, and I'll turn it back over to Sabrina.
Thank you, Steve. Thank you so much to our fabulous presenters today. Y'all have shared so much helpful information that I'm loving seeing the chat blow up here with the positive comments and thanks. So Robert, Steve, Lou, Evelyn, Clarence, Brian, we could not do this without you. So thank you so much. As Lauren said, if you have specific questions, please reach out to your local SBA office who can best assist you as you navigate this funding. We will be sure to share a program wrap out with all of the slides and links that were discussed and shared today. You'll also be able to view this program again on NGLCC's Facebook and YouTube. We'll share that YouTube link with you tomorrow as well. Feel free to share that along in your networks to make sure that other business owners are getting to take advantage of this incredible information. So with that, thank you so much for joining us. We'll see you back here in a few weeks for another NGLCC Webinar Wednesdays program, and have a lovely rest of your week. Thanks.